And as the war in Ukraine continues, many economic sanctions have been placed on Russia, and Western businesses have either suspended or cancelled their services in Russia. But it is having unintended consequences and global ramifications on the global markets. Michelle Schneider from Market Gauge joins us now for more on this. Michelle, lovely to have your company as always. Thanks for joining us.
Nice to see you, Holly.
Michelle, let's talk about some really unintended consequences that are flowing right around the world at the moment. Now, what impact is the war having on the global markets? What are you seeing out there at the moment?
Well, even though we've had a nice bounce today off of the lows, we still haven't really done very much to resolve a stagflation and a hyperinflation environment. In fact, if anything, the Russia-Ukraine situation has exacerbated. Now, even if oil prices may have peaked with the sanctions that we finally put in place with Russia and looking towards the Middle East for raising production, it doesn't really make much of a difference in terms of what's happened with food prices. And now we're seeing the spillover into some of the industrial metal prices and, of course, in the precious metals. And that is that everyone is braced for these higher prices. And even if the raw materials themselves don't go much higher, if they don't go really any lower, it still very much feels the pinch for the U.S. consumer and for the global consumer, possibly even worse in Europe, where they've already had much higher prices in terms of petrol for years.
Yeah, we know oil prices have surged off the back of the war in Ukraine particularly, and as you mentioned there, they have been high in Europe for a while now. How bad will it get?
Well, so far we've peaked out at $130 a barrel, and we dropped down today to $110. Now, obviously around $75, $80 a barrel would be much better. Can we get there? Possibly. But if not, if we really hold around these $100 levels per barrel, then anything can continue to disrupt the market. At this point, like I said, the narrative seems to be that the rest of the global world has this under control, and we hope. But nonetheless, I would definitely think that as long as people are paying, particularly in the United States, more than $4 a gallon of gas, consumers are angry about that, and it certainly is going to impede any chance of a major economic recovery, even though we do have some recovery, considering just about a year ago we were completely shut down. So it's a complicated situation right there, which is why the market is so volatile.
But over in Russia, we're seeing many businesses there being sanctioned by Western companies at the moment, unable to operate, which means then people aren't earning money, people aren't spending. What does that mean for the economy? How does the economy bounce back from that?
Well, that is really a good question, because one thing we haven't brought up yet today is the Fed, and they still have the situation where they're meeting this month and they're probably going to raise rates. So we don't think that the economy is going to necessarily recover to anything tremendously robust. But with the same token, we do not believe that we're going to go into any kind of recession, because the happy outcome of COVID was that, like I said, we went from nothing to something. And typically in a recession, what you see is a lot of layoffs from companies. So even all these companies that have gone out of Russia, let's say, they may feel somewhat of a pinch. But at the same token, we still have over 10 million jobs open here in the United States. And so the labor shortage won't happen. So it's going to be very interesting. I can't fully say this is exactly what's going to happen. But what I can say is what we're seeing evidence of, which is this sort of stagnating economy, stagnating market, range bound, and I think that's going to continue for quite some time. I don't see any way out of it at this point. We'll see what happens if the Russia-Ukraine situation resolves.
Michelle, there are also recent reports as well that when Russia was being sanctioned, and they obviously were sanctioning banks, and that affects the ordinary Russian everyday people, right, unable to access their money as normal. There were reports that a lot of Russians were actually turning to the crypto space to be able to sort of avoid these sanctions. Are you seeing anything like that out there?
Well, certainly on a more global basis, yes. In terms of what's happened here, the big event was Biden's executive order to look into regulation, which actually is more perceived, that along with Janet Yellen's leak last night, as a positive, because what it basically does is it green lights institutional investors into thinking that this is going to legitimize the space. And then also you've had Dubai come in and say that they want to be the great innovator for fintech and cryptos. So yes, I think that there's a lot of people here in the United States, obviously globally, and now of course with Russia, looking for some kind of loopholes where crypto can base out at around this 40K, and that should help some of the other coins as well. So we'll see.
Michelle Schneider, thank you as always.
Thank you.